Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Market optimism is what we're talking about this week with our panel members, Research Director Shiraz Mian, Stock Strategist, Senior Stock Strategist Kevin Cook, and Market Technician Kevin Matris. The market does remain optimistic, and there's two things that are kind of underpinning the optimism from what I can tell. You guys correct me if I'm wrong. Even though we did not get a final agreement over the weekend on Europe, there's still optimism that the new deadline of this Wednesday is going to be met, at least with some bare bones details about what's going to happen to bail out the Eurozone. Right. And then earnings season seems to be have gotten off to a good start and gotten better here as we move through it. So I want to talk with you, though, Shiraz, first about something that, because you wrote about optimism this morning.
That's right.
On Zacks.com. And so what happens is if the Wednesday deadline is met with the plan to bail out Europe, it removes financial collapse off the table. But if it's not met, how long is the market going to remain optimistic?
That is the big question. In fact, I am a little bit surprised, positively surprised, that the market took the delay in the plan from the weekend to Wednesday in the stride and didn't really get too hung up over it. And my explanation for that would be that the European leaders finally are really tackling all aspects of the problem for the first time. In the past, it would be a question about bailing out this country, bailing out that country, kind of kicking the can down the road, putting Band-Aid on one small problem at a time. Now they are talking about simultaneously addressing all the issues that have been plaguing the common currency. So there is a recapitalization of the banks. There are some serious haircuts, restructuring, and official default for Greece. And there is talk of bulking up the scope and size of the rescue fund, and they want to do that all at the same time. Now, there are a bunch of details that still need to be worked out, but it's the comprehensiveness of the proposed plan that seems to have reassured the market. I won't be surprised if it gets delayed by a day or two beyond Wednesday for the market to still remain kind of optimistic.
All right, Kevin Cook, you wrote last week on Zacks.com that the bulls own the rest of the year. But if we don't get this agreement, is that still a valid outlook? Or does Europe not have that much to do with what's going on?
We will get an agreement. Listen, the market has been pricing in a resolution since the beginning of October. When stocks reversed and we got strong follow-through days to take us above 1,200, the big players know that a resolution is coming. All right, there's many big players behind the scenes working on this. Tim Geithner in China are constantly in Europe and Merkel and Sarkozy's ears telling them, we need to get this done. Right. And big institutional equity players know it's going to get done. The volatility you saw last week, chopping around above 1,200, was just waiting to go higher, as I said. The one thing that was interesting this morning, Shiraz just talked about multi-pronged solutions. Well, so we're getting closer. But overnight, the ECB that's the big gun here, sort of like what our Treasury or Fed could do with, just print money and fire the bazooka. That big gun was taken off the table. Now, at first, that sent the euro down 150 points, 1.5 cents. But the thing is they are addressing, they're going to find a way to make it work, and the ECB is always in reserve. So that's the good news. And really, right now, it's just about, for our stock market, it's about earnings, and we are going to finish the year strong. Okay. Kevin M., is the market oversold here?
I don't think it's oversold. Whether it's overbought, that remains to be seen. Talking about Europe, I think the big thing is that it does seem as if financial collapse has been taken off the table. There is a ton of firepower over there in Europe, and they just had to figure out a way to marshal all of those resources so they could circle the banks, and it looks as if that is what they're doing. I don't know how great and grandiose this plan is going to be, but as long as it looks as if they can take this default idea off the table and that the banks are not going to collapse because of it, then I think that we should be okay. In regard to the market, I got to go back to earnings, which is what everybody's talking about here. And I think the earnings season so far is shaping up to be pretty good, but in my opinion, based on some of these numbers, it's not as great as some of the past couple of quarters. Before I came down here, I wanted to take a look at how many companies have reported and what they've done. About 20% of the companies in the S&P so far have reported earnings. 65% of those companies have posted positive surprises. 25% of those companies have posted negative surprises, and the other 10% have met expectations. That's interesting because it's a little bit, the pace of beats is below the last couple of quarters. Usually you're looking at the pace of beats being at a little bit over 70, 72%. We're at 65. Now, there's still a lot more earnings season left. By the end of this week, more than 50% of the companies in the S&P will have reported, so we'll have a much better idea as to what earnings season is going to shape up to be. But, this has been good enough. Based on all of the hand-wringing that we had seen several weeks ago, I think a lot of people are breathing a sigh of relief, and that's allowing the market to continue to trek higher.
All right, I want to follow up on those beats that he was talking about a moment ago with you, Shiraz, because leading up to third quarter earnings season here, analysts had been cutting their estimates.
That's right.
So are the beats, in view of the fact that those estimates or some estimates had been being cut right up to the starting time of third quarter season, are the beats looking less impressive to you?
I would say that they are a tad bit softer or weaker or less impressive than what we have seen, as Kevin put it, in the prior quarters. But from my perspective, the bigger issue on the earnings front is not just the third quarter reports, but the outlook for 2012. And I still have some concerns on the 2012 front that we are not really seeing as many revisions, particularly on the positive front, as we should have started seeing at this stage in the reporting cycle. They could come through over the next few days, but if we don't see enough of revisions for 2012, both on the positive as well as the negative front, we have plenty of negative revisions. Yeah. Then the overall air of uncertainty that we have seen about 2012 estimates will remain, and that's not helpful for the market.
Okay, Kevin Cook, quickly, should investors here, rational investors, I'll call them, be looking for opportunities rather than dwelling on pessimism?
Absolutely, yeah. There's even if you have a short-term horizon, you're looking at trades you want to put on for the next month or the next 3, 4, 5 months. There's tons of swing trade opportunities, okay. And you just have to look for them. You look for stocks that are in uptrends, both on an earnings momentum basis and a technical basis, and especially on the dips.
All right. Speaking of opportunities, Kevin M., top stock pick.
Mine is IAC Interactive Corp, ticker IACI. They are an internet commerce company, and it's an interesting company because they're kind of like an internet commerce conglomerate. They have 50 brands. They have exposure in over 30 different countries, and it's a very interesting operation. As a matter of fact, you can break them down into 4 different segments. They have operations in search, match, service magic, and media. What I like about them, though, right now is they're going to be reporting earnings on November 3rd. Last 2 times they reported, they showed an 80% positive EPS surprise. The previous time they showed a 50% positive EPS surprise. So things are looking good. Earnings estimates are going up across the board. Technically speaking, they have been in a fantastic uptrend for the last 52 weeks. They're up about 50% over the last 12 months. But in the last couple of months, they have been in this consolidation range, but it looks as if they're getting ready to break out. If they can get through 43, that's the breakout point. I've got a price target of 52. That's a 20% gain from here.
Okay, Kevin C.
Coinstar. They're not going to be a Netflix killer, but they've got an opportunity here to take some disgruntled Netflix subscribers and build some business. We got 33,000 of these kiosks. Right. I got about 6 in my town. It seems like on every corner. And it's all about simplicity and convenience for consumers, right? It's so easy. You're at the Walgreens or whatever. The kiosk is right there. Oh, let's grab a movie, right? And people like the physical DVD in their hands. And not everybody is streaming at home, right? Right. My son is, but I don't even know how to use it. So right now, I don't think the growth is priced in. The people that are going to continue to rent the red box way. And you're looking at prior to this, 50% earnings growth this year, 20% next year. Estimates are going to rise, I believe. One caveat, the Durbin Amendment and these transaction taxes on the debit cards and interchange fees or whatever, and just transactions that you and I make, that's probably going to make Redbox up their fee. But you stick your credit card in and rent a movie for $1.30, you're done.
Yeah.
So reporting earnings this Thursday.
You may want to get to learn how to use it once you get that streaming bill.
Chipotle Mexican Grill. It's been one of our top picks in the focus list. An excellent growth story. Despite these concerns about food cost inflation, they have one of the best traffic trends in the entire industry. The comps, they just reported late last week, and they blew past expectations both on the top and the bottom. Estimates are going up. It's a $300 stock now. Long term could be a $400 stock. So a very impressive long-term growth story.
All right, thank you all. With everyone here, I'm Terry Ruffalo.